Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, there we go. How about that, guys? Pre-market prep intro, changing it up on this hump day. What's up? Happy hump day, everybody. Yesterday, we had a horrible snowstorm here in Detroit, Michigan. If you all got the snowstorm wherever in the world you are, let us know where that snow fell. Today, we've got clear skies. Snow's all melted. We're ready for spring. Final little kick of winter. But what's up, everybody? I'm going to start today off with the way that I start every single day, which is to remind you guys what the point of this show is. Why are we spending these 2 hours together? That's right. We're going for like 2 hours every single day. The reason why we do it is we want this to be the best trade idea resource out there. We want there to be literally no better way for you guys to get trade ideas than by watching the show. Ideas coming from myself, coming from Jason, who's going to be joining us, our CEO, in a little bit on the stream. Most importantly, coming out of Zinger Nation, all of you out there in the community hanging out with us, saying hi. Drop in the stocks that you care about into the chat there. We will have time to look at some of them today. I promise you that. I've got a handful of trades that I want to make today on the show, so hopefully we'll have time to get to those and a little bit of a preview as to what we have coming up, who our guests are. But we're going to have Simon Lerner from NetCon Trading joining us at 12:30. We're going to be talking day trades, day trading strategy, trades that he's in right now at 1 o'clock Eastern. Arcimoto, ticker FUV, Foxtrot, Uncle Victor, Ukulele Victor, something along those lines, ticker FUV, is going to be joining us at 1 o'clock Eastern. Check it out. It's a pretty cool company. It's if any of you are familiar with our Young Investor, it's a Young Investor favorite there. And then at 1:30, Kick Analytics is going to be hopping into the stream. So we're going to have ideas flowing from our side, guys. And again, if you have stocks you're trading about, you want us to look at FTCV, the eToro SPAC, we will definitely look at that one. Baba, that's another good one. We haven't talked about Baba nearly as much as we should have, given all the recent volatility. But all right, guys, there you go. There's the preview for today. And producer Rohan, it's Wednesday. It's hump day. We played the wrong intro. I think we should hit a couple calls. Can you throw the phone number up?
Absolutely. Let's do it.
All right, let's do it. Let's do it. This phone number, it's going on the screen again. Like I said at the top of the show, I want this to be the best trade idea resource out there. If I'm not delivering on that, call me out. Email SpencerIsrael@benzinga.com. That's my manager. Tell him Luke does not bring the ideas. One of the ways that we get the ideas flowing is out of Zinger Nation, out of the community, okay? Call in. We're doing rapid fire community stock pitches, all right? I've got the same list of 50 stocks that I look at and talk about every day. If you're in there in the chat, you're Long Jumaya, I see somebody is, you have a stock that you want to pitch, go in, drop it in there. You've got 3 minutes. The floor is yours. There's the phone number. And let's just hear these stock pitches. And then how about this too? How about we have the community? We have Zinger Nation out there. I'll vote on whether or not they would get long your stock based on the pitch or not. All right. So instead of you guys just being critical of me, you can be critical of each other. And again, guys, phone number is up on the screen. 3 minutes. Floor is yours. I'll work the charts on my end. So
we got our first call.
All right. First call. Let's throw them on the lines.
Hello.
Hi. This is my first time calling into any show ever. This is actually pretty awesome. But I was just wondering if you guys could go over maybe Nano Dimension's recent acquisition. That might be a nice ticker to look at. There's probably a community favorite too.
Absolutely. Okay. Let's look at this. So I'm in my trusty Benzinga pro.benzinga.com, 2 weeks free. Check it out. Oh gosh. It's a part. So let's just talk about the deal as a high level. All right. So they bought a machine learning company. I'm just looking at the deal structure real quick. So they did the transaction. It was a $70 million total transaction. $40 million of that deal was done in cash. $30 million of that deal was done in stock. Okay. So when you look at the market cap, this is always a good little quick math exercise to do. So the company has a market cap of $2.5 billion. They're using $30 million of stock, and when they use stock to do a deal, that means that they're creating new shares of stock and putting them out there on the market, so all the shareholders get diluted, right? If there's only 100 shares in existence and they make 30 more, instead of your share being worth 1%, now it's worth what, 0.7% or something like that. So that's how they do these stock deals with a $2.5 billion market cap and a $30 million stock acquisition. I don't think it's really material. I see that Carisdale, famous short seller, coming out and saying it's a stupid deal. They don't like the company. They don't like the acquisition. But I think it's so small enough that it's not going to be really material. The other piece of context that I'll provide, and again, this is going off of not knowing the intricacies of the acquisition that they did, is that generally speaking, stocks which do acquisitions, their share prices underperform for the next year. It's not me saying that anecdotally. There's a lot of academic research that's been done in this space. And generally speaking, when one public company buys another company, their share price underperforms for the following year. And there's a lot of work that's been done on the psychology as to why that is, right? Like one of the big reasons that researchers have found for why companies do big deals is because then the CEO has a little bit more ego, right? Hey, I run now not a $50 billion company, I run a $100 billion company. And, instead of me getting paid $5 million a year to run a $50 billion company, I can now get paid $7 million a year to run a $100 billion company, right? There's all of that in play. Again, this is a really small deal. On the surface, I think that it's not material. Thoughts on those thoughts, or do you have any sort of other opinion on that machine learning deal that Nano Dimensions did?
Yeah. So basically, you're right. It is a very small acquisition. I was thinking there's going to be a lot larger or two larger acquisitions, but I think that there's two things that I noticed. One, it's a pretty small acquisition, and they're getting pretty complete control over the company, as well as they're offering that $30 million, I think, in stock-based compensation. And there's a lockout period for 3 years. So I think this is really a 3-year hold. I think the lockup period is really showing, like, okay, you're not selling the shares till then, but by that 3-year lockup period, we're going to be in a position where me selling those shares isn't going to really affect us as much. Like that's the way I'm kind of looking at the way that the deal is. It's such a small acquisition. They have so much money. They still have like $1 billion to make some more acquisitions, and I think that's what their goal is for this year, is to make a couple of good acquisitions to kind of lay out the path for their 3-year journey to get to where they want to be. That's my kind of my thoughts on the acquisition.
I took myself off the screen. I'm on the same page as you in that I don't really think that this acquisition is super material. I'm going to throw this one out to the community, though, guys. If you guys like Nano Dimensions, you are long the stock, you like the stock at $7.31, throw the 1 in the chat. If you don't like the deal, throw the 2 in the chat. I'm curious where everybody is out there. I don't think it's a super material deal one way or another. All right, man. Thanks for calling in. Or you have other thoughts? You have other stuff to say it.
Yeah, I was just thinking of I have basically my portfolio is made. It has a 3 to 5 year time horizon. So a lot of the stocks I've picked for it, or like the 4 main holdings I have for that 3 to 5 time horizon, would be like Nano Dimensions, Palantir, Neo, and Bionanogenomics. What are your guys? What's your thoughts on that? Like 3 to 5 year time horizon.
Is that all that you own?
Yeah, those are the only ones that I own right now, because I pulled out of pretty much everything around February.
I'm gonna go Dave Ramsey a little bit. I'm gonna do my best, Dave Ramsey, and say add some more stable companies into that mix, right? You named a couple stocks that I own, right? Like the Palantir type companies and plays around that. But I also own, the Apples of the world and the Googles of the world, right? The Amazons of the world. I would suggest throwing some of those in as well, because if you hold only 3 stocks, and they're all stocks that are super high valuations, right? We're talking 10, 20 times price to sales. If they can't deliver on estimates, I mean, they're all in for some downside in there. So I think that it's my personal opinion. Again, my philosophy is I take 70% of my money and I put it into these more stable plays, specifically ETFs, and it's that last 30% that I try to get outperformance on, and that's why I'm selling puts in Palantir and doing those sorts of trades. So just for my style, it's a little bit too risk seeking for me. But if they all hit, you're gonna outperform the hell out of me. So that's my thought.
Yeah, in 3 to 5 years, right? But yeah, I'm only 19, right? I live on my own, so I don't really have a lot of extra money to throw into those more expensive or more stable stocks. So I guess I've done pretty well over. I've only been investing for a year now, but I've done pretty well over the year, just like everybody else, I guess. I did initially start in with like those recovery stocks and like airlines and cruise lines and stuff like that. So I know now going forward, I'm really just building. I'm gonna build into Palantir a little bit, and then I gotta find some safe stocks. I know that, like maybe a bank or something, some kind of financial services or manufacturing or industrials.
All right, and how about this? First air horn for the day. 19 years old, already in the market. I love it. Let's go. We all gotta like that. And give us your name.
Oh yeah, Owen.
All right, thanks for calling in, Owen.
Owen, yeah.
All right, guys.
Take care, man.
Take care. Let's do another one. All right, we just got NNMD. Again, this is the idea show. This is the For the People show. Let's throw one more user call out there. After we get through that, guys, if you're just joining us, we're going to be talking day trading and some day trading strategies up here in a minute at 12:30. Other stocks on the list to get to today: Baba, FTCV, Jumaya, Netflix, Plug, and Ride. So we got a jam-packed show, but let's get another stock out of the community. Producer Rohan, we have somebody on the phone lines? I heard the ring. Producer Rohan, if you're talking, we can't hear you. All right, we have someone, Producer Rohan?
We do. Go
What
ahead.
is going on, Zinger Nation? Can you hear me?
Yes, sir. We can hear you.
It's Power Hour, baby.
It's Power Hour. That's what I'm talking about. The only stock market show with an air horn. You won't get that on pre-market prep. But all right,
So,
give us a take a look at.
What do you think about BACT? VIH.
Get one more time on the ticker.
VIH. BACT. It's kind of a cryptocurrency company. They were a spinoff of the New York Stock Exchange. Of the ICE. I think there was like 100 people, and they kind of spun off, and they've got their own company now called BACT. I'm really bullish on them.
So I think that today may be the day for the crypto trades again. I bombed out of all of these stocks when Coinbase could not hold the open price of its IPO, right? That 381 open price. And guys, this is a SPAC, right? If you're wondering why is the name BACT and that's not what's up on the screen, this is a SPAC. This is a post-announcement pre-merger SPAC deal. Today
what I like about BACT,
what do you like about it?
It's only like $1 billion at this price instead of buying like Coin, which is, I think it's like 80, 90 billion valuation right now.
How do the numbers look?
I think BACT is a profitable company right now. They make money off the futures. I think it's CBOE. No, not CBOE, but I'm not sure exactly which ticker symbol. But
All right, I'm looking. I mean, if the numbers look good, and when I say numbers, specifically what I think is important for these companies are the user trends, right? We want to see the user growth. That's why I liked all the Voyager. But I mean, if the numbers look good,
too, is they just created an app, and on this app you'll be able to trade crypto and do all kinds of things. But they also have something interesting where they're creating a new market where you can trade airline miles and you can trade other things like that, like points and stuff that you get from other vendors. I think like Starbucks and a couple other companies are partnering with them, and that'll be interesting. If you can trade your airline miles for something else, like trade it for Bitcoin or for something more useful. I think they might have something there. They might have room for growth.
Yeah, I mean, I think it's interesting, right? But let me ask you this: what catalysts do you have on the horizon, or do you just have some of this post Coinbase shakeout momentum that can start to pick up now?
Yeah, I think crypto is going to do good for the rest of the year, because crypto usually does these 4-year cycles, and we're seeing it really hot this year. We did see a little bit of a sell-off, but Ethereum's almost back to its highs. So, I think the market doesn't look like it's shaked out yet. I think it's still pretty bullish. And even looking out like 4-10 years, I think this asset class is going to be much, much bigger.
All right, man. Well, hey, I appreciate you calling in and throwing a new ticker on our radars. It's not one that we've looked at on this show before. I like it. That's what we're all about, baby. Representing for Zinger Nation, trying to get some of these new stocks, some of these new tickers here, and I appreciate that you gave us one. All right.
Thanks for having me on the show.
For sure.
Appreciate it.
Sure. Absolutely. All right, guys. Let's hit a little bit of a preview for the rest of the day. And I see somebody saying Voyager's up 19% because they're buying back 5% of the stock. Yeah, that's a hell of a run. Still not back in it. Sorry, guys. Could have been a good day today. But all right, good for you. If you held the bag, you're having a nice day there. But all right, preview of what is to come, guys. Stay tuned. In just a minute from now, we're going to start talking some day trading and some day trading strategy, digging deep into that. Other stocks that we have on the radar: Alibaba, Jumaya, Netflix, Plug, and Ride. And then Arcimoto, CEO of Arcimoto, ticker FUV, everybody's favorite, like 3-wheeled electric vehicle company, coming on at 1 o'clock Eastern onto the show. And I'm going to make one more ask, guys. I'm throwing this one out there. If you are watching this show on YouTube, I promise you this. There is somewhere on your page, there's a little thumbs up icon. Here's my thumb. It looks something similar to that, if not exactly. Go ahead, press that like button, smash that like button. Let's share this stream. I am looking at Jason Raznick from afar right now, trying to get him to come on. I don't know if we can convince him today. But if we run these numbers up, I know he'll pop on with us and get some new ideas going. But all right, guys, without further ado, I want to go ahead, bring our first guest of the day onto the show.
What's going on?
What's up, man? How you doing?
Good. Thanks for having me.
Absolutely. That's an awesome chair. First things first, awesome chair.
Appreciate that.
And happy hump day. I guess before we dive into things, can you just give us a little bit of your background, your trading style, etc.?
For sure, man. So my name is Simon. I just turned 21. Been trading since 16 years old. Dabbled into crypto back in high school. I was pretty much taking all my savings that I had at the time. And I was making quite some money as a 16-year-old playing video games. And then crypto was, a thing back in 2017, starting to get some hype momentum, and I started pretty much investing in crypto. That's how I got into the trading world at first because of all the hype behind crypto. And then I slowly transitioned to stocks because of personal preference, and I really enjoyed it a little bit more, doing research on companies, and something that wasn't as volatile that I could understand because it was actual products I could use. I had an Apple iPhone, I shopped on Amazon, things of that nature. So transitioned into stocks and been trading full time since 18. 18 is when I really started picking up. I was still in college, and I ended up dropping out of college second semester freshman year, and then been trading ever since full time. So yeah, I'm based out of Tampa, Florida right now. Just moved down from New York. Was in New York until this June. Moved during the pandemic down here. Loving it down here. Weather is beautiful. Taxes are lower, and just enjoying the lifestyle here. So
no shit. So in Michigan, which I'm guessing is similar to New York, we got like 2 inches of snow, and I counted 6 accidents on the drive to work today. So I'm guessing you don't have that in Florida now.
We don't, but a little fun fact, I was born and raised in Russia, so I'm like a Russian descent. I live there, and the winters last for 6-7 months, so I'm used to having 2 feet of snow. And in Russia, there's no such thing as snow days for school. So whether there is 2 feet of snow or cars can't go through the roads, you still gotta end up in school and go to school. So I had that kind of childhood upbringing and some vivid memories, but I ended up moving to the U.S. My parents brought me here for educational purposes to pretty much go to college.
Which you then dropped out of to trade. Nothing wrong with that.
Yeah, I mean, I was studying business. I was honestly learning more driving to and from school, listening to business podcasts than I did from a professor in college who never ran a business of his own, never started a business. He was just regurgitating information from a textbook. And actually, a fun fact, I was in my macroeconomics class, and I was trading in class, and my professor was talking about the markets, and I came to him after class, and I was like, hey, currently investing in Tesla. That's when Tesla was $220 a share before the split, right? Just wanted to get some of your feedback, wanted to talk about the stock. Really loved your lecture today, by the way. He's like, Simon, I appreciate the enthusiasm, but I can't give you any feedback on Tesla or what to do because I'm not invested in markets myself. My wife doesn't let me trade or invest. And I'm like, wait, so my parents are, and myself, taking out loans or paying money to sit in a classroom and learn from a person who doesn't trade stocks and how to build wealth in the stock market, investing, and starting a business. How does that make sense? So then I was like, why don't I take it into my own hands? I dropped out and started pretty much finding mentors who had the result that I was going after, and actually, learning from people who had the results I wanted to acquire in trading and other aspects in life, such as business. Because the apples don't fall far away from the trees. If you were the apple growing the tree, and my professor is the tree, making $50,000 a year, teaching at 12 hours an hour, I'm probably going to be in a very similar place, right? So especially for business. So that's how.
And that's one of the things that I love about this show so much, right? Is I don't know if you were listening, right? But we just had users calling in to talk about stocks that they like and they're in for what reasons. Because it's so much different when you can make it real, and instead of that's why I don't watch CNBC all day, right? Is you just have people talking about stock and investing ideas all day. And then you show the disclosures, they don't have any holdings. It's like, all right. It would be a lot easier if I could just speculate about stuff, but I show my live portfolio every single day on this show. So yeah, I love that real aspect of it. So tell us about your trading style a little bit, your method. How do you identify the stocks that you want to trade, et cetera?
For sure. So my trading style evolved a little bit over time. Obviously, since I was 18 to right now being 21, it changed drastically. I started off with equities. I had a very painful learning curve. I think I blew 4 or 5 trading accounts, lost around $30,000 when starting out. It took me about 14 months to find consistency in markets. So I found that consistency trading stocks first, and then I got introduced to options. And about a year and a half into trading, I transitioned into options, and now mainly I'm an options day trader and scalper. I scalp weekly options if I'm day trading. I'm trading a couple of weeks out expirations, and I pretty much trade the same names over and over again. I look for catalysts, I look for momentum and direction, and synergies and the confluence with the overall market. So if, let's say, we have bullish news on a stock like Tesla, and the markets are pushing up and we have some momentum, I'm going to be looking for upside plays only. If we have some sort of misdirection where, let's say, we do have bullish news on Tesla, but markets are selling off, there is negative catalyst, I'm not going to be looking for upside plays. I'm probably going to be just sitting on the sidelines. So that's my approach. I'm in a trade between 30 seconds to 5-10 minutes usually. Obviously, options have leverage. You don't have to put as much capital up front, and you can make larger returns. That's why in and out.
Okay, so let me ask you this, right?
Mm-hmm.
Let's say let's go to the Tesla example, right?
Okay.
You got a positive market, right? Triple Qs or SPY, whatever is up for the day. You get positive news out of Tesla. Elon Musk tweets,
For sure.
enjoying my Roadster on the moon. And it's a video of him driving around on the moon. All right, that's our positive catalyst. The stock's already up 5%. You're looking at the chart or you're looking at something. How do you decide, hey, I'm going to get into this now? Are there indicators you use or any insight there?
In terms of indicators,
if you have charts to share it, feel free to go ahead and share your screen.
I can share my charts that I would be looking at. Let me just figure out how this works.
Amazing.
Share screen.
Yep. Yeah. Share screen. Pretty simple.
I just got to open my preferences and give this permission. Give me 1 second.
No problem.
Yeah, this is asking me for a password for some reason.
While you're doing that, let me ask you this. Do you like Wingstop or Buffalo Wild Wings better? It's this debate that we have going on today in the office.
Oof, that's an interesting one. Could you repeat the question? Which Buffalo Wings?
Sorry, Wingstop or Buffalo Wild Wings?
Probably going to have to go Buffalo Wild Wings.
Of course, right? No brainer.
Yeah. It's asking me that I'm going to have to apparently restart Google Chrome to share my screen. So it might kick me out of here for a second, if that's okay.
Yeah, go for it. Let's try it.
Give me 1 second. Sorry about that, guys.
I'll be here. I'm going to go on a Dogecoin rant while you're doing that, okay? All right. I'm going to go on my Dogecoin rant. This is a PSA. This is a Luke Jacobi public service announcement. I'm going to find, some sound effect to kick this off. All right, I didn't hear it. That means you guys probably didn't hear it either. It was supposed to be a bomb exploding. All right, PSA on Dogecoin. Before we get into this, in the chat, be brave. If you are still bag holding Dogecoin, go ahead, drop a 1 in the chat. If you're not in Dogecoin, drop the 2. There's no abstaining. I see we have 447 people here. Again, if you are still bag holding Dogecoin, drop the 1 in the chat. If not, drop the 2. There's the bomb exploding.
I'm definitely a massive bag holder. Or not a huge one, but I'm definitely hardcore bag holding right now.
All right, here's my opinion. We have 5 people in the Benzinga office today. There's only 12 people here today in total. At least 5 today are still bag holding Dogecoin. I think that the jig is up, guys. I think that I enjoyed the hell out of it. I thought it was amazing. I think it was a moment in time. In my personal opinion is that the jig is up. We had a blast with it, right? I mean, it was like the funniest market phenomenon in the past couple of months, at least, right? Maybe except for Roaring Kitty opening up his congressional hearing with "I am not a cat." That was a good one. It was one of the most fun stock market things to watch, but I generally speaking think that the jig is up, right? Yesterday was like the day. I feel like whenever there's a day that the world decides like this is the day where we're going to run this thing up and blow some energy into it, you get past that day, some of the momentum fades, the interest fades. I can get, I'm looking at the analytics on Benzinga.com and I can look specifically at the readers of Dogecoin here. Let me put this up. And Simon's back, so we'll bring Simon back on in a second. But let me just show you guys the Dogecoin readership on Benzinga.com, the change over time. This is a little bit of a leading indicator of the price because it tells you that, hey, interest is dying down. Let me just go to our cryptocurrency by day. There it is. All right, we'll get this data to load in here. All right, check this out. Here is the readership on Benzinga. Oh, I'm not sharing my screen. Hold on. All right, here's our readership by day of Dogecoin on Benzinga.com. Right, today we still have had 500,000 people reading about Doge on the site. It's a ton. but the interest is definitely down from these earlier spikes that we saw. I mean, it was even down on Doge Day yesterday. So if I had to be a betting man, which I am because I'm a stock market participant, I don't love it. I see that about half the chat is still in it, half is out. I appreciate everybody who participated. So there.
Can I just say, I think so. For Elon Musk Day or Doge Day yesterday, I was pretty disappointed, to be honest. Like, I definitely was expecting a 69-cent run up. But can I just say, I think, because I looked at Elon Musk's Twitter and he barely had any activity about Doge. And I think it's probably because Tesla is under so much fire right now because of the crash that happened, that he probably didn't want to be tweeting about Doge while that was happening.
It could be. I mean, you're down to 30 cents now. You're sort of like in that slow trickle of death. Can he double the price again? Maybe. I don't know. All right, there's my PSA. I'm throwing the warning out there. If you want to be long Doge, I'm not telling you not to. You can go ahead, let it ride all day, right? But in my opinion, I think that the jig is up. I'm not getting into it. Will the joke come back at some point? I absolutely think so. But if we're looking for like a $1 run later this week, which, I've seen speculation of that, etc., I don't think it's happening now. But all right, we're bringing Simon back on.
Hello.
Simon, what's up, man? Are you in Dogecoin?
No, I'm not in Dogecoin. Actually, funny story. I put 10 grand into Dogecoin back when the TikTok trend was going on, when it was 1/3 of a cent in June. And then 3 days later, I sold it at a break-even price. I was like, there's no fundamentals, in this. I need 10 grand for something else. I ended up putting it as a down payment on a house. Now that 10 grand will be worth 1.5 million, but can't win them all. So it is what it is.
Okay, all right, that's great.
Gotcha.
I was in it. I was in it and bombed out at 6 cents, which whatever. A 5-bagger on like several $100 into Doge, I don't really care about. But all right, you have your screen share up?
Yes, I believe I do. Let me know when you can see it. And
I'm seeing the screen that's you and I,
okay,
rather than the screen of the chart.
Yeah, how about right now?
Nope, I'm not seeing. There we go. Yep, I got it. Okay, we're good.
Let me know when it's live and you're actually sharing it, because I can't really see you because I'm sharing the screen right now. I might actually have to pull up our conversation on my phone or my big computer, because as you can see, I'm trading on my laptop right here and streaming this on my laptop. I have my big setup behind me, but let's go ahead and break something down. What question did you end up having?
Okay, so where we were at before we did our Doge PSA and vote, and Simon, about half the group is still in long and strong Doge, and about half is bombed out of it at this point.
So,
the question that we were giving this scenario as to what you look at when you're deciding to get into a day trade, and you told us your trades are typically 5 to 20 minutes long. The scenario was we're having a positive market day. There's good news out about Tesla, and it's Elon Musk driving around on the moon with the Tesla vehicle. The stock is already up. So what are you looking at to make the decision, like, hey, I want to get into this? I don't know if there's indicators that you like to look at or what exactly it is.
Mm-hmm. So first of all, you asked me, just to backtrack, you asked me what indicators I use. Most of the time, I only use price action, volume, and I have a custom coded indicator right over here. I'm not sure you can see that. Pretty much gives me certain levels based off the past couple of days. For example, right over here, we have the previous day high, pre-market high, previous day low, pre-market low, low day, stuff like that. Those are the critical levels that this indicator gives me. That way I can have certain pivots and points that I can use for trading. This chart is usually for my daily analysis. This is the 15 to 200 SMA you see here. This is not what I use for day trading. I usually use this flexible grid that I have set up open. So here's how I trade. I usually have 3 time frames pulled up for the same stock that I'm trading. I have the 1 minute, I have the 5 minute, and I have the 15 minute, just to see price action and multiple time frame analysis for different candles, as well as I have either SPY or QQQ to see the overall direction of the market, right? And then I have the level 2 for that particular stock, and the tape with bid ask and price that's getting filled, which is very important for me since I'm a scalper for critical levels. I don't want to get faked out, so I use that. And then on this side, on the right, I have my contracts that I would typically trade. Here, I was trading Airbnb 2 days ago, so I had Airbnb here. But I usually have the call side on for whatever strike I'm trading for that particular stock that is here. And then I have the put side. So it's easy for me to execute. I have my execution window, and then I have the time and sales for the options as well. That pretty much shows me where the contracts are going through. So just to backtrack, in terms of Tesla being already up on the day and what I'd look for, first of all, I want to see same direction in the overall markets and confluence in the direction, because if we have something like Tesla, let's say, pushing up on news very heavily and the overall markets is selling down, that's a low probability trade for me just in the books, no matter what kind of catalyst.
Okay, so if you have the stock pushing up,
yep,
on good news, the market's down, you don't like those setups.
I don't like those setups. No. Okay. No, I do not like those setups. That's number one. Number two, I do not trade the first 15 minutes of market open. I like to wait for the first 3 candles on the 5-minute chart to establish, so I know where buyers and sellers are sitting. That's number one. Number two, I like to give first 10-15 minutes for the premiums to settle, because what happens first 15 minutes is people are closing out their swing trades. A lot of people are chasing, trying to get in on certain news that came out overnight, and there's a lot of volatility and uncertainty happening in those premiums. And as you know, in options, you get into premiums, they move very quickly and aggressively, and especially on a day like Wednesday through Friday, you have a lot of theta burn and IV crush, especially for a stock, let's say like Netflix today. There was a big IV crush after earnings got reported for Netflix, so I'd avoid trading that for the first 10-15 minutes. I want to see those first 3 5-minute candles, the ones I'm drawing right now, established. That way I know where buyers and sellers are sitting. I know, hey, in this zone, we have a zone of demand. Buyers are stepping in based on this wick, and the price is trying to climb higher. Here we have a zone of supply, right, based on those 2 wicks. And that gives me just a little bit of a better understanding of what to look for, what kind of ranges to look for, right? That's number one. Then I'd be looking for plays. I don't trade the first 15 minutes. I'm very big on standard operating procedures and discipline and certain criteria that I actually have here that I follow for every single trade. One of them is, hey, you don't take trades first 15 minutes, and I'll tell you why. I very big on tracking my data. I tracked over 600 trades that I took about a year ago. Out of those 600, 415 trades were red. The ones that were taking between 9 a.m. and 9:30 a.m. and 9:45 a.m. So the first 15 minutes, I knew just looking at my data and analyzing that data, hey, you probably shouldn't be trading first 15 minutes because you get trapped a lot, you get faked out, premiums are acting weird, not settled. You shouldn't be trading first 15 minutes. The moment I started making that adjustments, my stats started going up, and that's one of the data I track. Number two, you asked me if Tesla, let's say, is up already 5%. What do you do? I typically don't like to play stocks on the upside that have already hit their ATR for the day. So if Tesla's ATR is, 6%, 5%, average true range, how much it moves, let's say 3%, I would be very cautious playing the upside if it has already hit its ATR. Let's say today we're only up 0.82%. This still has room for the upside, and I'd be looking for something. And then I have 2 cutoff times. I stop trading, so between 9:45 and 12. From 12 to 3, I don't trade, and then I come back at pretty much power hour, 3 p.m., and look for opportunities and swing trades there with options. When I swing, I usually pick a couple of weeks out expiration just to buy myself time. I rarely swing naked options, especially weekly expiration. So that'll be it. Today, we had actually an awesome play on Amazon that me and the group caught live this morning. We were looking at that 3305 level very aggressively, and we saw that hold, and we ended up getting into that play on this candle right here on the break at 33.25, which was the pre-market high, with markets that started pretty much aggressively pushing right over here. Once SPY started breaking pre-market highs, I saw Amazon hold over here, and on this level we ended up getting into 33.45 or 33.40 calls, I believe, and that was a 30% move on options. I started scaling out at 33.36 and 33.40, and then that was posted.
Okay.
Yeah, I went over that trade.
So let me try to break this one down again. I'm like the slowdown guy when we do these. All right, I slow everything down. But okay. So you saw the stock ripping above pre-market highs, right? You saw that positive momentum in there. That was your decision to go long.
Sure.
You went long via options. And were you going out of the money options, in the money options, and what sort of time?
I believe I was going one out of the money for this week expiration. So that was 33. So it was breaking 33.25. So I traded the 33.40 calls right over here. I like those a little bit more because they had a little bit more volume on those contracts. Typically, when I trade options, I want to see above 1,000 volume and above 1,000 open interest for the particular strikes that I select. Due to liquidity, I want to be able to get in and out of those options quickly, and I want to have a smaller and tighter spread and a lot of liquidity in those options, because if you get trapped on a pullback and you're trying to get out and there's less than, let's say, 100 volume, and I know a lot of people make mistakes with options when they trade contracts that have, let's say, 10 volume, 15 volume, 200 volume. It's very hard because there's not going to be a market maker.
Especially for a day trade.
Especially.
It's right. I mean, it's next to impossible.
For sure. Yep.
Okay. All right. And so you went long options this week, a little bit out of the money. You saw it break out of those pre-market highs. That was a tip off. And then you started closing the position slowly. What made you decide to start closing the trade?
So this was the chart I was actually using for trading right here. It looks a little bit different. I have mainly two indicators applied aside from volume and price action. I have the Bollinger Bands right over here, these blue lines, and I have the VWAP indicator, which is right over here that I'm drawing. Same thing on a 15, 5-minute, and 1-minute time frames that I'm using. The reason I'm using these, since Bollinger Bands and VWAP, those are volatility indicators, and I want to see volatility expansions. For me, as an options trader, I need to see volatility in a stock for me to profit, because if there's no volatility, the stock is just consolidating. You're giving away your pretty much premium to the theta burn, right? So let's see, we have Amazon pulled up here. Let me see if I have my cursor selected. This was the tipping point we were looking. First, when markets opened, markets looked kind of choppy and weak. I was looking actually for a downside play on the break of 33.05 right over here. We broke under 33.05. 33.03 was the low of the day. I did not take a trade because the moment that we hit that 33.03, buyers stepped right back and started getting price action back up, and the candle did not close below the level. I'm looking for.
So you're always looking for where the candle closes rather than.
Yeah. Yes.
Middle. And these are 5-minute candles you're looking at, or 1 minute?
This is the 1-minute candle, and even the 1-minute candle didn't close. The 5-minute candle closed way above. As you see, the next 3 candles followed, I guess, had a $10 move up. And this showed me, hey, there's a lot of buying pressure here. And this is the exact same time as on this chart I was showing that SPY started picking up. The Qs started picking up right over here, exact same time. We bottomed out and started ripping. As well. And then also I was listening to Benzinga Charlie. I listened to Charlie. I have Charlie turned on real time here on TOS and on the Benzinga app we usually use. And he was mentioning some sort of news that came out here. There was an Amazon price target upgrade to 4,200. And then there was a partnership, I believe, with Grubhub or something along those lines. Dish, Amazon Web Services partner for 5G connectivity. This was the same exact time I was looking for that trade, and those news came out. Charlie announced that, hey, there is potential partnership with Dish. I was like, that sounds like good news. Markets are starting to pick up. We just held this level. So markets are pushing up. That's one check. We held on price action. We have this sort of bullish pin bar forming here. That's a check for me, right? And then we have critical levels that are breaking, which was the pre-market high for me right over here. And I entered on this candle that I'm pointing to right here. We, we're consolidating here, and the moment we started breaking out of this level and trading above that top VWAP line, that's when I knew volatility is starting to expand, volatility is starting to pick up. And then on the volume average, we also had above average volume on that breakout candle. So that gave me clarity and confirmation to pretty much take that trade. Now, in terms of my scale out, I usually enter. If I enter right here, I usually have 2 or 3 scale outs. So the moment that it pumps, I believe on this candle right here, I took 50% off. That's just because in case it's a fake out, in case some sort of news comes out and stock does something like this, I want to make sure that even if we dump to a certain level,
and what was the line? What was the signal to take the 50%?
I believe right over here, and I usually take out 50% of my contract positions on scalp. On the
okay, so you just got some quick confirmation. You take half the money off the table. You're already
take half the money off the table
Okay,
because with options, as a scalper, something like this happens, I'm down, right? I don't want to be in a position where I'm down, even if now that I took profits, let's say on the second candle, even if the stock retraces to the same level that I entered, I'm still going to be somewhat up because I took some profits up over here. And then if, let's say, we break down, which would invalidate my thesis, I would take the trade off the table, but I would be at break even. I wouldn't be down a lot. With a lot of people, what happens is, they take a trade, they don't take anything off the table, they get greedy, and then they see this, and then they're down on their initial investment or lost a lot of money because of theta burn, IB crush. And then the second thing I want to point out is that the moment the stock breaks out of this critical level, premiums jump heavy. A lot of people, a lot of option traders are watching these critical levels for entries, and what happens is premiums spike because everybody starts chasing. Everyone's like, hey, it's breaking the pre-market high, let's get in. A lot of market orders are coming through on the option side. People are just wanting to pay any price to get in. That's when your premium spike. And that's, if you're getting in at that point, personally, it's already kind of too late. You missed the entire move, and your risk management and risk reward is not there anymore. That's when I'm already taking half the position off to all those people chasing and trying to get in at market just to get filled and catch the move. And then the second takeoff for me was at the top of this candle. The second I saw this wick form and rejection, there was some selling pressure. I closed the trade out here. And then we waited. Then I pretty much saw this chop out. I established that, hey, there was another zone right over here at 33.45. We had a lot of resistance, a lot of selling pressure here. A lot of sellers are sitting here with those wicks. Then I was waiting for a rebreak of that trade, but I didn't take it over here. I didn't trade anymore, but I did post in my group that I noticed a bull flag right over here, right as we started bouncing on VWAP and holding. And this is where I alerted to my group to pretty much get in long with tight risk management. As you see, we pulled back, started forming a pattern over here, bouncing on the VWAP with these wicks. I said, hey, at 33.27, get into calls. And again, it's not an alerts group. I don't tell people where to get in. I said, hey, it might be a good idea to look at Amazon at 33.25 for a potential entry because of the risk rewarded offers. The risk would be on the break of VWAP. Would we get out, that would invalidate our theses. And in terms of the target, it would be top VWAP over here, the break over previous high day that we had established. And that is the second trade that kind of worked out today. I was also looking at Netflix on both the upside and downside since they had some sort of catalyst after earnings, but I didn't end up taking any trades. Let me pull the chart up over here. We had a lot of chop. In the first part of the day, I was looking for a downside play under 503.78. I noticed that we saw some sort of formation. We had a wedge, but there was no trade here for me because it wasn't just following the overall markets. I was also advising people to look at that 515 level on the tape and level 2 to my group. If we broke strong over that level and the markets continue to push, which I'm looking at right now on my second screen, they're kind of trading sideways. Volume has dried up. We would have been looking to get in long on Netflix above 515.50, which was the previous high day here. Got rejected here once again, and I wanted to see if this was right as we were here, if we can see some more consolidation here under the level and then buying pressure step in with higher increased volume to push this stock higher, and outside of this sort of resistance, if that makes sense.
Yes. All right, you gave us the full breakdown. I said, I'm like the slow down guy, right? I always slow everything down.
Yeah.
But I mean, you did a pretty good job of going back through it. Let me take it back then a step, and can you go back to that very first chart that you showed that had the levels throughout the day?
Levels throughout the day was that. What chart was that? Sorry about that.
You had just one chart that was
right
the whole screen. Yeah. Okay. We got a handful of questions about those. Of people saying what are the levels you're watching on this? I believe it's a minute chart.
For
and
sure. So
and
this
let
is
me.
a minute chart.
Yep.
Mm-hmm. And this pretty much is a custom indicator that I have coded in TOS. If you guys want, you can DM me after this. I'll share a script of you that you can import into Thinkorswim. It just goes into the studies section right over here, pre-market levels, right? And then it gives me data on stocks because every day before market opens, I like to have certain levels established. Those levels are the pre-market highs, the previous day highs, previous day's lows, to see what ranges the stock was trading in. And I realized that that was the most consuming part of the day, that I could be allocating that time to something more productive rather than spending 40 minutes charting all these levels on every single stock that I open. If I'm watching 10, 20 stocks here, and then I have 4 to 5 stocks on this watch list, I have to set all these levels manually. It was very time consuming for me. So I coded an indicator. We had pretty much these levels established automatically. So any stock I pull up, let's say I pull up Airbnb, it's going to give me those same levels for any stock that I open, right? So which stock were we at? Were we at Netflix? I believe we were at Netflix. So let's go through what all this means. So PDH means previous day high. This is 563.56. Obviously, Netflix had earnings and ended up capping down right over here.
Yep.
Previous day, PDC's previous day close, 549.57. PDL, 546, previous day low, right?
Yeah, it's great. It's amazing.
Yeah.
Yes,
Yeah,
I'm like, I love all those key levels, right? I'm like not your EMA guy or your SMA guy or your FIB guy, but just like, all right, show me where are the prices, where there's buying and where there's selling.
Mm-hmm. I'll tell you one thing. I have a lot of people in my group and whatever that message me, ask me about indicators that I use, and mostly it's just volume, price action, and critical levels, because you need to understand how indicators work. If you're looking at, let's say, the MACD, the RSI, let me just add the MACD over here to do a little demonstration.
Okay, and so we got to get clipping, unfortunately.
Gotcha.
Let me make two more asks, which is, how can people find that Thinkorswim script, and then 2, how do they stay in touch? How do they follow along?
For sure. So you guys can DM me on Instagram at Simon_Lerner. Just message me either Benzinga or script, and I'll send you guys this TOS script where you can have all of these numbers pop up on your screen automatically for any stock you are looking. And then if you guys want to stay in touch as well, Simon_Lerner on Instagram. We'd love to connect with everybody, answer any questions, and provide any sort of guidance and help you guys might have with stocks and options.
Perfect. Awesome. Simon, appreciate you coming out and hanging out with us, taking us through the trade. You did the full breakdown. Very much appreciated, sir. And guys, if you're new to the channel, you're coming to check out Simon, we go all day. All day, 8 a.m. Eastern to 6 p.m. Eastern. Subscribe, hit that like button, stay in touch with Simon, and we will talk to you soon, sir.
Luke, I appreciate you. Have an awesome day. Thank you, guys. See you later.
You too. All right, enjoy that warm Florida weather. Still sort of, I mentioned at the top of the show that it's now like warm in Detroit. I just saw snow again. I swear to God. April 21st. That's what we're dealing with over here, okay? But all right, guys, if you are just joining us, stay tuned. Preview of what is to come up next on the show. Ticker FUV, Arcimoto. CEO is going to be joining us. Super interesting EV company. So we'll be getting to that in just a minute. Other tickers that we have on the docket, we've got Baba, Jumaya, eToro, FTCV. It's a pre-SPAC deal. Plug and Ride, if we can get to them all. So we've got a jam-packed show, guys. And I see all these crypto tickers floating around in the chat. So we will hopefully have some time to get to the crypto tickers. I have some opinions. They just rain on everybody's parade with Dogecoin. Sorry. I'm sure that the Twitter is full of hate as soon as I open it after we're done here. But all right, guys, I'm going to go ahead and bring our next very special guest on. Mark, what's up? Welcome back to the Power Hour, man. We're glad you came back to hang out with us.
Luke, glad to be back on the program. How's it going?
It's going well, except I thought it was spring. It's snowing for 2 days straight here in Detroit, Michigan. But other than that, everything's going well. What's up in your world?
You must have gotten your sunshine. We got a nice break from the rain for a week or so, but I think it's coming back at us.
Awesome. All right, guys. Mark is CEO of Arcimoto, ticker FUV. Again, that's FUV. Drop that ticker in the chat. Help your fellow zingers out there. And Mark, but before we dive into things, could you just give us a little bit of background on the company for those who are not familiar?
Sure thing. So Arcimoto, we build. The FUV is actually the also the name of our first product, which is the fun utility vehicle, and at its root, Arcimoto is really about a reimagination of transportation away from oversized, super inefficient vehicles that we typically use every day into something that is much more human scale, right sized for what we actually do. So the way that we travel en masse is one or two people traveling a relatively short distance with a relatively small amount of stuff. And the tool that we use for that job is typically a 4,000 pound to 5,000 pound car or SUV that is designed to carry 5 to 7 people hundreds of miles. And so the idea of the Arcimoto platform is to just build the right tool for the job for daily mobility in order to catalyze the shift to a sustainable transportation system, because the system we've got now is anything but.
Okay. Awesome. And we just showed the website. You have like the best homepage of a website ever, as an aside. I love that you just put the product out there. So that's what we were just looking at, guys. So you get a peek as to what the vehicle looks like. You put out earnings a couple of weeks ago now. You showed basically it's 120% growth in revenue on a year-over-year basis. Still up to a couple $1 million, right? I don't think anybody's getting into the stock for that, right? We want the growth.
I think anyone who's looking at us as a near term, if you're looking at us on the sort of a net present value basis, you're missing the big picture, which is we are just at the very beginning of the process of getting to true scale. I mean, we shipped 46 units in 2019. We were shut down at various points in all 4 quarters of last year due to the pandemic, and still managed to get 97 customer vehicles out the door. But we are, this is really, you can think we're producing right now at a very low volume. We're aiming for much higher scale as we look to 2022 and beyond. This is ultimately, we think that this platform is suitable for around 80% of the vehicle trips on the road. And so as we look to what are really convergent trends in the future of mobility, electrification, autonomy, ultralight platforms, vehicle sharing models, we really see Arcimoto sitting at kind of the confluence of those trends. And so 2021 for us is all about laying the groundwork for this next decade of growth.
Excellent. And that's exactly what I wanted to ask about is sort of what that timeline for scale looks like. And it sounds like 2022 is the year where we'll really start to see that.
Yeah. So we just bought a new production facility.
You told us about it last time. Is it officially yours?
It is ours. So we said that we were going to close on the 19th, and we did. So that was a one small step on the way, but it's I was just over there with the team last night, and it was actually the first time that I'd met a bunch of our team members since we've been largely working from home, those not on the production process. But we've got a lot of work to do to turn that from what it is today into an actual advanced vehicle manufacturing facility. But it is getting to scale. Having a place to build them is definitely a necessary piece of that process.
And that facility is if I remember properly, you're going to be able to turn out 50,000 units out of that facility. Is that accurate?
Our targeted capacity is 50,000 units a year from that facility, and we're aiming to really kick off production in the new facility before the end of next year.
Okay, excellent. And I see Jason is joining us.
Hey, Mark, how are you?
Jason, I'm well. Good morning.
Good morning. So, is any production going on in the current facility?
Yes. Yeah. So we've kept what we call the AMP, the Arcimoto manufacturing plant, which is where we go from. We vertically integrated material cutting, robotic welding, CNC forming and machining, all the way through final product assembly. That's where we're building our vehicles presently. We're calling our new facility the ramp which is the ramped amp, if you will. And that won't come online again for, we're aiming for end of next year to get vehicles out the door of the new facility. But we will be producing vehicles. We've at earnings, we laid out a target of delivering 500 customer vehicles in 2021, which would be more than a 5x of what we did last year. And then to unlock real volume and growth, we're going to need more space.
Got it. Okay. And then is Sandy Monroe involved still?
Oh yeah. No, we are working with the Monroe team on a daily basis, both for the planning out of the new facility and then also fine tuning what we're actually going to build inside of it.
Yeah, he's the best. I don't know if you ever get to Michigan, but if you do, I know you've been here before, but you should stop by our office. We're in downtown Detroit.
I would love to. I've been basically off the road for a year, as many people have, and that same thing is true of our marketing efforts. I mean, we've been largely just communicating with folks online. But next week, I'm kicking off my first outbound tour down to California for travels that we've done, and we're going to be launching multiple marketing road shows on the East and West Coast in the coming months.
Got it. Okay. Now we're going to do a little rapid fire. Okay. So some questions from the chat. Guys, ask your questions. I have some in the queue. One can it be used in the winter?
Absolutely. I use it year round. Here in Eugene, Oregon, rains 160 days a year. Even the open model does a very good job of keeping the water off of you. Now we are planning. You can think of it like a Jeep, right? You've got when the weather's decent, or if you just like riding it that way, you have the doors off. You can put half doors on. We're actually just about to launch the half doors into production. We've got full side enclosure on the drawing board. And I think it's important to understand the distinction between the products that we have launched already and the underlying vehicle platform. So we've announced, I think, 5 different variations of the vehicle platform, sort of different hats that you can put on the same underlying electromechanical gear in order to differentiate the product for different markets. So the fun utility vehicle, which comes open by default, is I would say more tuned to the sort of Sun Belt markets. California, 5th largest economy in the world, Arizona, Texas, Nevada, all the way out to Florida. And then as we get to scale, we're certainly planning on the fully embodied, more buttoned up version for the Detroit winter.
Got it. Okay. And Mark, couple more things. Do you need someone said a motorcycle license to drive the Fun utility vehicle?
So 3-wheelers in the U.S. are classified as motorcycles federally, but almost every state now has some kind of a carve out for 3-wheelers that either let you ride them with a normal driver's license or with a 3-wheel only endorsement that's very easy to get. So in the case of Oregon, for example, you can drive the Fun utility vehicle with a normal driver's license because it has a roof and it's got seat belts. But we have another product called the Roadster, which is an amazingly fun machine on the road, but it has no roof. It's got no seat belts. It's more of that kind of pure motorcycle experience. And so we're in Oregon, exact same controls. You can drive the FUV with a driver's license. You've got to have a 3-wheel endorsement to ride the Roadster. And I, in order to drive our own product, I went and got I went and took the written test. It was piece cake. So now I'm legal on the road for all Arcimoto products.
Got it. Okay. And then this one seems obvious to me, but maybe I'll just ask because maybe it's not. When you go into mass production, is the price gonna become cheaper?
Yeah, well, so that's one of the core pieces of our mission. We believe firmly that we don't get to a sustainable transportation system until the wide market can afford the products, and so affordability is a key goal of ours for the mass production version in particular. And it's a simple function of economy of scale, right? The parts, all of the constituent parts get less expensive. The process to put them together gets more efficient. And we're doing a lot of work to really simplify some of the more expensive parts of the vehicle architecture in order to drive down costs. So yeah, cost reduction is a major goal as we go to scale.
Got it. And then someone mentioned the safety being a smaller car. I know there's smart cars that are small. How do you address safety?
Yeah. So and you can go to arcimoto.com/safety for kind of the deep look. You have to realize,
put a link in the chat about arcimoto.com/safety so you can answer their questions. Okay.
Yeah, but in general, it is a motorcycle class platform. It is a much lighter weight vehicle than a full size car on the road. The advantages that the Arcimoto gives the operator versus a typical bike: one, it is a stable platform, 3-wheeled vehicle, 2 wheels in front, 1 wheel in back, very low center of gravity, much more braking power, and much more maneuverability capability versus a typical bike. But you've got a roof overhead. You sit up about the same height as a crossover SUV, so you are much more visible to other road users, and you have a much easier time seeing people around you. So you get when you think of typical small form vehicles, they're usually really low slung and hard to see. With the Arcimoto, you're up there. People can see you. You can see other people. So maneuverability, stability, and visibility are sort of 3 of the core pieces there. And then you also have 2 seat belts for each occupant, a 3-point going in each across each shoulder, a roof that passes the roof crush test for cars. So for a vehicle in its class, we believe we're doing everything we can to make it as safe as possible. But you are still a much smaller vehicle on the road than the typical 4,000-pound SUV, which is, I think part of the point of the exercise is that the shift to a sustainable transportation system should mean that we make the road safer for everybody, and what causes the road to be unsafe is everybody using a giant 4,000-pound machine by themselves to go get a cup of coffee, which is nuts.
Got it. No, I agree. And the delivery aspect of it too, for short order delivery from restaurants.
So we have the Fun Utility Vehicle was our sort of our flagship product. One of the products that we actually started piloting last year is the Deliverator, where we take the back seat out and that whole back end of the vehicle becomes storage. That we think is really an ideal solution for the rapidly emergent trend of last mile delivery, whether you're talking about food or parcels or meals. That the Deliverator really is a great balance between a platform that is small and maneuverable, can park it anywhere, and yet you can carry a lot of stuff.
Yep. Yeah. So how do you get these places to know that you exist, that you have these vehicles, that you can do delivery and all that kind of stuff? How do you get these schools or whoever would be a customer to know that you guys exist?
Well, we've had a number of fairly high visibility pilot projects to date. What we're doing now is we are approaching fleets that have interest. We just basically wrap a vehicle with their branding and say, hey, you want to take this for a couple of weeks and give it a try? And so far, the response has been really fantastic. So the part of the goal in the next, over the next 18 months is to get as many pilot Deliverator vehicles in the hands of fleets that can make much larger purchase commitments for when we're at mass production. So we're going to, we've got a bunch of people who have been waiting for customer vehicles for a very long time. We need to get vehicles into their driveways. And then we also need to really prime the pump for scale production as we look to much higher unit volumes in, sort of starting in end of 2022, but really 2023 and beyond.
I mean, if you can get the production, even golf carts. I mean, I know it's not a golf cart, but golf carts last summer were selling like crazy because people are at home. They wanted to be able to commute. If you're able to get a price point like that, where there's like $8,000 to $10,000, and this is way better, stronger, more stable, safer, all that, you could dominate that space. No,
I think in the real advantage, you think about the golf cart space or what's sort of known as the neighborhood electric vehicle. Those are great vehicles for the neighborhood. They're great for areas where you're really limited to kind of constrained to an area of low speed. But the real advantage of the Arcimoto platform is you can go on all the roads. It will serve you throughout your whole community. And so it's a much higher level of utility than the neighborhood electric vehicle concept. So and again, I mean, the golf cart market is a big market. We think that the market potential for the Arcimoto platform is larger still.
Yeah. It becomes the when you get the manufacturing going in a real way. I mean, the volume that you guys can do would be tremendous. Were you guys the subject of a short report that was on some website? Someone asked me to ask you. I don't know what this is about, though.
Yeah, I addressed that at some length at the beginning of our last earnings call. A ironically named company called Benitez put out just a garbage hit piece on the company, and it was just chock full of falsehoods and misrepresentations. It is an unfortunate part of the market that we live in, that there are. I think what my guess is, and I'm not a financial analyst, but we saw a massive accumulation of short interest in Arcimoto on NASDAQ starting in December or late November, and to me this just seems like it's part of goes with the territory, unfortunately. But we're going to keep executing, and I think we are going to. My belief is that we will prove all of those short thesis points provably false.
Did it have false points in the report?
Oh yeah.
Okay.
Yeah. No, it was garbage.
Someone said it was on Seeking something. I don't know. So
there have been, which is interesting. I mean, just again, interesting to know that there have been, I think now, 7 hit pieces on Arcimoto in the last few months. And again, we are a much smaller company by market cap than other players in the EV space, and we are actually delivering product to customers, and we have a bunch of rave reviews about the product that we've delivered. And so I think my sense is that some folks are trying to protect a bad bet. But again, I'm not an analyst, so take everything I say with a grain of salt.
Yeah. And at the end of the day, like I remember I invested in a company called HubSpot. It was at $45, $50 when I invested, and there's a hit piece on it on Seeking Alpha, and the guy just said it's way overvalued. It's 10 times. It's gonna be a $10 stock, and that's what it should be at the most. It's at $520 today, and that's like 3 years later. So time heals. Like, it's like time heals, time shows who can execute. You get the game.
And when you've got 30% of the company's float sold short, that's a lot of stock that someday is going to have to be bought back. And so, some would argue that provides an opportunity.
Totally. I mean, exactly, because if the stock goes up, and at the end of the day, if you execute, the stock will take care of itself. That's the way I look at it, Mark. I mean, yeah. And then like for capital raises, because I'm sure that Wall Street's coming to you to try to do capital raises so they can invest in a growing company. How do you look at that for capital raising?
We did a number of capital raises over the course of last year that put us into the best balance sheet position we've ever been in. And so, when we look at going to scale, obviously building out a scale production factory is going to take some cash. But our primary target for the source of that cash is the federal government. We see the Advanced Technology Vehicle Manufacturing Loan Program as an ideal source of financing for growth. It's what that program is for. We're in sort of pre-application consultation mode. We've shipped them the first couple of drafts of our application, and we're expecting to submit that formally here quite soon.
All right. Awesome stuff, man. Next time we got to get Sandy to come on with you. Well,
that'd be great.
Maybe we'll do it from the facility. I'll reach out. But thank you for coming on. Appreciate Arcimoto, guys. Sweet cars. I think it's a sweet company, but time will tell and execution. You guys look at it, and the company's been around. And when working with Sandy Monroe is a bullish thing. It's like having the Mark Zuckerberg of like social, but for electric on your team, which is a very powerful.
I'm not sure Sandy would love the comparison, but perhaps. Hey, Jason, we got to get you behind the handlebars. Let's do the next one live.
Let's do the next one live. Let's do it. Let's go. Let's have fun. Good talking to you. And I know you get the whole game. We talked about how Tesla is, the other three automotive companies, and you're, very smart in the space, and that's why I like talking to you. It's not just about Arcimoto, but this. How the market dynamics in the space, and why those three automotive makers had no choice but to let Tesla. I guess they did have a choice, but they chose to let Tesla win.
Yeah, it's hard to disrupt yourself. And that's kind of the classic innovator's dilemma problem, is that if you've got this sort of entrenched market, it makes it much more difficult to go after something that points back at your other products and says, these all suck. And so, I think that's why, even though Arcimoto has been, we're a small, scrappy startup in Oregon, but for whatever reason, we have been better positioned than just about anybody else I can see to actually go tackle this problem, which to me is, I've been working on this for 13 and a half years. This is the significant challenge project of my life. So, and I think it's a meaningful goal and a reasonable way to pass the time.
Yeah. One of our users says they need to give you a BZ wrapped vehicle and you do a live drive around and stream it as you take us around Detroit. Sounds like a good idea. We'll get a lot of viewers.
I think that is right on point with our present marketing program. So
I don't need the car. You can just give it to us for a week, and I'll drive around Detroit, put some cameras on it. We'll go live all day. We'll take it to the Comerica Park where the Tigers play. Do a whole thing.
Jason, let's make it happen.
All right. Sounds good. All right. Thank you for coming on, Mark. We will talk to you soon. See you soon. Appreciate it. Have a good day.
You too. Cheers.
Yep. Cheers. Okay. So that is Mark, FUV. The guy's working hard. The guy's smart. I'm telling you, he's smart. I came to know him from a few months ago, 5 months ago, when we were talking about how Tesla has out innovated the big automakers. And one of the big issues is because they have a whole dealer network. And electric, since there's less parts, there's less service for dealers. So even though maybe Ford could introduce something sooner, it messes up with their whole model. And that's the innovator's dilemma. Do we let go of this part of it or do we not? And that's why Tesla has an 8-year lead or 10-year lead. And Mark was talking about that. And a year ago, 98% of people were never talking about that. So, and although Gordon Johnson would still say, oh, those automakers are doing great. But so not just Arcimoto, but he gets the business. And when I'm looking at companies to invest in, I want to invest in a company that the CEO is building on the business that he has, but he also understands market dynamics and he understands what it's going to take to move the needle to build this brand. And he knows it's getting the manufacturing out there and getting the marketing out there. So now I'm going to have my Benzinga vehicle driving around. People are going to want it. What is that? We'll sell 1,000 that day. Who knows? All right. We have another guest coming on. In 1 second. I got to do this real quick. Hold on. All right, the commercial's a little too long. I think it's 30 seconds. They should make those 15 seconds. We'll get those shorter. But that's for our Instagram account, Benzinga. If you want us to have Instagram stuff or we want to see on it, let us know. Send an email to powerhour@benzinga.com with what you want on the Instagram account. young investor. We'd have loved to have you on right now because FUView is on, but we have 2 guests lined up, I think. Aaron Bree may be able to fit you in, but I don't know because Aaron has a guest. Aaron, will you come on for a sec? Aaron, you got to turn on your mic when you talk.
Yeah, that would help a little bit.
Yeah. So, Aaron, I'm going to do the guest thing, okay?
Yes, sir.
Okay, hold on.
Adnan, how we doing?
Hey guys, how are you? Hi Jason, how are you?
Good. How are you?
Not too bad, not too bad. Long time no see.
Yeah. How's your day going?
Wonderful, wonderful, wonderful. I just want to have one quick question with you guys. Jason, what do you feed these guys in Benzinga? You guys are all fired up. This is
I'm fired up? I feel like I'm less fired up today. I feel like I'm not bringing the energy like I should.
Good. No, it's amazing what you guys are doing.
We feed them. We got Red Bull. We got Monster Energies.
Oh my God!
Thing,
That's only remind me of the Bloomberg pantry, actually.
Yeah, I mean, were you at Bloomberg?
Yeah, I worked for Bloomberg for about 17 years. I was mainly working in Singapore. My last job was over there as a head of commodities. So it was pretty good. We built this shipping platform over there, and we sold hundreds and thousands of subscription over there at the same time. So it was fun over there. I mean, we had a long run from sales to marketing to product development to strategic development and everything as well. So it was fun.
You should have joined us. You should have joined us after.
Well, I came to US about 6 years back, and you've been very, very helpful. I invited me to your wonderful Benzinga conference as well. It was an amazing conference as always. So, yeah, let's see what the life bring us to next level or so at the same time.
So, sorry about that. Go ahead.
No, you go.
Adnan, you said you did commodities at Bloomberg?
Yeah, so in my last 5 years of working in Bloomberg, I built the commodities platform. I built the equities platform. I was responsible for the Southeast Asia sales at the same time. So we built this satellite vessel tracking system whereby you can look at the vessel movement across the world, and this heavily dependent on oil flows from one market to another one as well. So I think we sold a lot of terminals out of it as well. So I mean, it's a great company, and it's all boiled down to one thing. I believe that everything in life is like a time series. You have rows and columns. That's pretty much it is. So as long as you can understand the data and you can get the best thing out of it, this is where we came in at the same time, and this is where the birth of the Klick analytics came in place as well, because I realized that in Bloomberg or in elsewhere, I think there's a lot of tools out there, but there's hardly any pre and post trade analytics that is out there. So what Klick analytics, and by the way, Klick is started with a K because I couldn't get the domain name with a C. So one thing that I wanted to mention over here as well. So our idea about Klick Analytics is that we want to provide the fast, easy, intelligent, and affordable analytics on post and free trade analytics. We had a large footprint of global exchanges over here. As of now, we have about 12 exchanges. By the mid of next month, we'll be adding about 20 over exchanges around the world. Primarily, we had a very heavy footprint on the US market at the same time. So this is what we are. Our business model is very simple. It's a web-based application, and I will love to show you over here by sharing my screen. And what we intend to do is our business model is very simple. It's a web-based platform. The subscription is about $10 a month for all the 30 over application that we build over here in our platform. So that's what we are. I am a firm believer of seeing is believing. So if I can share my screen, I'll show you some of the analytics that we have in our
Yeah, go ahead, share. I just had Klick Analytics pulled up so I could show people the main page, but I'm sure you can do a better job of walking us through kind of the useful tools on there and what to do on there.
Absolutely.
So you still are keeping up with the commodity markets today. I know I've been seeing a lot of stuff about lumber because the lumber prices have been, skyrocketing, going up. But then yesterday they were actually limit down, and I didn't even know that.
It's amazing. Well, there is a highly correlation between a lot of things in commodities. Well, oil market, natural gas, all different things. So you got to look at things in perspective at the same time. But to be frank with you, lately I've been more towards the equities kind of wealth. But it's everything in life right now, especially in the markets. It's very connected right now. So can you see my screen right now?
Yep, we got it pulled up. We're looking at the S&P 500 just on the main page of Klick.
Excellent. So what I'm going to do is I'm going to go through with a couple of the apps that we have with different markets. The idea is that we're going to look at the broad market first, and then we're going to zoom into single security analysis over here. So this is our application can be accessed on Klick Analytics. So if I look at, let's say, a very high level overview of all the major market groups that is out there, and this is our efforts to bring together all the correlated list of the instruments in one group. So this is where we can get all the key symbols as in indices, the commodities market, the currencies, the Bitcoins, and of course the economic data over here at the same time. And what we can do is that we can also look at some visualization very quickly at the same time to see how the data looks like. One thing that we are very big is the correlation engine that we have. So you can see quickly all these key symbols that we have, how they are correlated over here. And then you have the data from two range at the same time. You can do all sort of different stuff over here. So let me pull up, let's say, all the different groups in SPDR. So SPDR have all the SLCs, the SLUs, and SLK. So this is where you can get all the correlation done in one shot. From here, I want to jump into our collections. And you can think of collection as our way to, again, organize a lot of dispersed companies that is out there. So what we do is we have about 117 collection over here, whereby what we do is we group individual companies together based on their business or operation at the same time. So let's look at the company over here. This will pull up all the possible media stocks that is out there. Of course, you can look at a quick preview of the media stocks over here and how they are doing it, any positions that is out there. This is the historical performance, so I can quickly see what's the rally looks like over here and what's the highest rally looks like. So for this particular stock, Ideanomics, the highest rally was about 0604 2020. It was consecutively for 4 days. The initial price was 2.38, and the last price was 1.18 with a 210% returns over here. So these kind of things that you can do it very quickly on any of these symbols that we have in our platform. What we can also do is to change this whole thing to a visualization tools. For example, I want to look at a visual view of all the relative TTM revenue, relative volume, market cap. So we can see that the urban one has the highest relative volume over here. You have a Netflix. So again, the idea over here is that you can quickly look at all this information on the platform and then understand what they are. One of the key things that we intend to do is, and this is what exactly the Benzinga Nation is doing, is to spread the word of ask. And for me, ask means it's always seek knowledge. We don't want to take the word from other people or so. I think the best thing to do is to do analysis by yourself. And this is what we are doing over here, providing different tools or so. Since we are also on the topic of a correlation, we have a correlation engine over here, whereby you can literally take any instrument that is out there in the Klick Analytics platform. So let me pick up the FANG over here. Of course, you can create your own correlation. You can share with the community in Klick Analytics at the same time. So let's try Tesla over here. Let's try NIO. And let's try the Dodge over here at the same time. And as we go through with that, the data gets updated on the system, and you can do all sort of different things. And of course, let me call this Benzinga rocks. Okay, so you can do that in our platform at the same time. Now, from here, what I would like to do is to jump into a single security analysis and what we can do with a single security. So let me pull up Tesla over here. And on the Tesla, you can do all these things over here. So for example, I'm going to look at a quick seasonality for Tesla over here. So this is the 4 years chart that you can plot it over here. This is all the prices. And of course, you can see that the 2020 prices seems to be the better among the last 4 years data. And it's plotted based on month-to-month basis, in January to all the way to the December. And one thing we can also do is we can look at the calendar months. And this is our computed data that runs and compute on the fly. So what you are looking over here is the seasonality by calendar month. So for every January in the last, whatever the trading history of Tesla is all pulling up the best returns, like within the month of January, February or so. And on the bottom also, you can see the average maximum possible returns, negative returns, positive occurrence. This happened 64 times. This happened 36 times for every single January. So the idea over here is to give you the tools to analyze the historical time series data that we have in our system. Of course, for every year, you can see that what's the minimum and maximum averages over here at the same time. Okay.
Got it. So is there a good spot to go to on the site to say maybe to get some trade ideas as opposed to just go into the site to look at stocks that you're already trading or whatever it is?
Correct. So there are a couple of things that you can do over here. What you can do is, of course, you got the whole screener that is available for you to screen your securities over here. At the same time, this is a pretty simple screener whereby you can define your list of filters that you wanted to look into it as well. The other way that you can also do is you can look at the trade ideas. So our trade idea is is a curated list of all the different screens that is out there. So for example, if you wanted to look at all the, let's say, let me pick up the price trends up and down. And you want to look at all the stocks which been consecutively up 6 days. Now, this is something that, it's difficult to do it in an Excel sheet or something, but this tells you that these are all the stocks which have been up consecutively for 6 days. Of course, you can define based on your list of sectors over here. You can filter down to energy and stuff like that at the same time. So right now, there's none in energy right now. So there are other tools that is out there, but the key thing that we intend to do over here is to give you the tools. Once you identify, let's say, what you want to focus on, you can type in your list of security. You pull up, let's say, Tesla again, and you can browse through more in detail about what this application can help you with or so. So for example, up and down, one thing that I was looking is what's the highest rally that happened in the Tesla world was in 2020. And let's say if I were to change this to Dogecoin, and since we are a multi-asset class platform, I can run this on currencies, crypto, you name it, or ETFs and everything over here. So let's look at the things. So this was on 07/01, 27/21. This was consecutively up for 2 days from 0.0075 to 0.0471 with a 528% returns over here. So these are the things that you can do it over here. Again, on the security side, very quickly, you can also look at the correlation, what this particular stock is correlated to. So this looks like this has been highly correlated to gold. Again, defined by your list of parameters. I can define year to date over here and run it. And this will give you the correlation based on your criteria. So right now it's a Fed fund rate. The soybean is more correlated over here, but you're not limited to that. You can actually pick up your own watch list, and then it's going to search your symbols within the watch list and then be able to correlate all this based on your basic symbols that you are looking into it at the same time. Okay. Very quickly on the earnings side, I think there's a lot of things that's going on over here. And I wanted to look at what's the effect of the earnings on prices. And this gives you all the earnings that's been announced by Tesla and how many days ago was there. So what we do is that we take the earnings returns on, let's say, from the 1 day to the 14, as well as on the day of the earnings, as well as after the day of the earnings. So you got a whole spectrum. 14 days before, on the day of the earning, as well as 14 days after. And what we do is that we summarize this whole stats over here, which tells you that what's the average before an earning, what's the average after the earnings, and et cetera, et cetera. So this is something that that's been there. I know Netflix has the earnings recently, so we can run this on Netflix over here and see how the Netflix earnings looks like over here at the same time. So if you are very big on earning side of stuff or so, this might be a good tool to look into it as well. Last but not least, I want to show you the another things what we do over here. So let me pick up, let's say, Tesla. Over here is this tells you the best and the worst trading hours. So what we do is that we take a 1 minute data that is out there, and we look at the each minute data on an hourly basis, and then tells you that how the trading pattern looks like over here. So all the heat maps tells you what's the best and worst hours over here. And of course, at the bottom, you can see that, if you were to trade, and this is the last 20 days data for, let's say, Tesla, and how the best and worst trading hours looks into it as well. So it looks like on the 65 times, this is a positive occurrence, whereby if traded between 2 and 3 p.m. Eastern time, this is where the Tesla stocks seems to be working really, really well. Questions so far?
No, I mean, I'm finding this really helpful. I'm just going to let the audience know. So we've got Adnan here with Klick Analytics. That is with a K, Klick, Klick Analytics. I'm going to throw the link in the chat. But yeah, I mean, this looks like a good, great spot to go for some extra data. Are there any other tools that you want to show us real quick?
Just a couple of more over here. Again, if you are looking for seasonality patterns in the stocks, what we do is that we daily calculate, we have about 80,000 over here. We daily calculate all the seasonality patterns for all the instruments globally. So what you see over here is your seasonality scanner. And what you can do, since we are on the month of, let's say, in April, so I'm going to pick up, let's say, in the month of April, or let's try the month of May. And I would like to see how individual stocks has been performing. So what it's doing over here is taking the individual instrument, it's taking for every May month of the entire 11 years of data, which has like 233 days, and how many times the returns was positive or negative over here. So for example, if I am only interested with, would like to see all the positive returns above 80%, and the system is going to pick up all this data for you. And of course, I can always sort by. So it looks like the FCL, this is a stock which is have like 3 years of data, has 64 days. And this has been performing really, really well. And I can always change that to total number of years, so even like higher. So I want like more data to play around. And this gives you like all the best stocks that is being out there. So CRVL seems to have 233 days data. And within this data, the win rate is almost 100%. So our tools help you to pick up the stocks based on the historical data and everything. And of course, you can play around with all these things at the same time. Okay.
Yeah.
From here, I want to show you the hot topics, which is SPACs and NFTs as well. We added some new analytics that's released recently as well. And this is work in progress. So I want to show you SPACs. And again, the idea over here is that we want to put together all the SPACs related information in one place so that our audience can look into it as well. So this is all the kind of deal structure or screener. So this gives you all the name, status, target company, any target deal announced, any key people, you wanted to look at it within SPACs. Well, what's the trust value looks like? What's the unit of warrant info? When was the IPO date was announced or not announced? What's the IPO size? I can even further this to based on our only looking for SPACs whereby the deal is already announced. So this is another way for you to kind of filter out all the SPACs related deals that is out there. And of course, to see what's their percentage of progress in terms of completion date from the IPO side, who's the underwriter, and of course, you have the full disclosure for SEC filing at the same time over here. Now, you can also do top performing SPACs over here, of course. I'm sure DraftKings is going to come on the top right now. So this is again for you to look at all the best performing SPACs that is out there. We put together about 35 over here. We've been adding this data more and more. And one thing that we can also do over here is if you wanted to look at all the SPACs where they are positive from the initial open, we can definitely look into it as well. So apart from all these 35 SPACs that we have, we can see show me only whereby that they are up based on their initial IPO list over here. So you got 485% change in its SPACs for DraftKings or so. And of course, all the recent SPACs IPO performances that is out there, that is also available in the platform over here. And of course, you can kind of filter around all these things that I'm looking for these prices to be up 50% or 30% or 20% or 100% for all these SPACs, which has been recently IPO perform over here. So this is, again, the whole idea is that we have these data tables, we have filter tools whereby you can look into round and everything at the same time. Okay.
Awesome.
One couple of things that, couple of 2-3 things to show you as well is we got the earnings information at the same time. We went through with the individual security analysis, but this is again another similar screen based on seasonality. And what it does is that if you were to look at the stocks, if you were to buy a stock 10 days before an earnings or any time frame of your choice, it can be price before, moment before earnings, or price after the earnings. So let's say if I were to hold a stock 10 days before the earnings, and I wanted to see what's the win rate looks like. So this gives you all the stocks. It goes back historically, all the earnings for all the companies. So it's about 4,000 over companies that is out there. And look at all this data, and then gives you all this information in terms of like a win rate. So this is the company which has like, let's say if I were to increase the total observation to, let's say at least 10. So you got at least 10 earnings to play around with that. And if I were to look at the positive earnings over here, so this is where it looks like that if you were to hold this stocks, buy the stock 10 days before the earnings, that seems to be giving you a pretty good run rate over here at the same time. So again, as I say from the beginning, is that we are all about data. We are all about real-time prices. We wanted to look at how this data tell us this story at the same time. And that's what we do over here. One last thing to show you over here is that one thing that is constant in Klick Analytics is our relentless pursuit to make our system better and better, add more data. So we have a very visible product roadmap for our audience. So there are a lot of things that is under review. There's a lot of things that we are developing. And of course, we have completed a lot of other things at the same time. And then last but not least, we are very big on making sure that all the information that we have is pretty accessible. People can look into it, what's new. We have a lot of videos that is out there. We can explain clearly also what the platform does and everything at the same time. But this is pretty much, I would say, a quick preview that I can combine together for Klick Analytics over here. The thing of it is like, is a simple, fast, easy, affordable platform for your pre and post-trade analytics. It has data for the stocks, ETFs, and other thing at the same time. I mean, one last thing, let me show you over here is the ARK investment over here. And this is the ARK Innovation ETFs. I mean, it's the talk of the town. And if you were to look at all the holdings over here, definitely you can look at all the holdings that is out there, any holders that has been there. And of course, any times their rally information, et cetera, is all coming up at the same time. And one thing, last but not least, of course, we got the whole hedge funds holdings data that is out there. So if you were to look at what the BlackRock is doing recently, what they're buying and selling, and which companies they have allocation with,
So do you have the return data from like when they start holding?
Yes, this is something very interestingly. This is something we have been working on it as well. So what will happen eventually, that we'll have another column over here, which will take this date whereby they report it, and we're gonna calculate the current date. and then look at the return. And I believe that's what you're looking for, right?
Correct. Yeah. And back to when you were showing the ARC ETFs, I was curious on that as well because it showed some of the returns. So is that the return from when they put that in the ETF?
Sure. In 2 days. Give me 2 days. I think we should be up and ready.
Okay. Beautiful. All right. Well, yeah, we got to get you back on. We had someone asking, if do you have any videos of people that are actually like live trading using your platform? If not, we got to get some of those videos made because I think that'd be really interesting.
Absolutely, guys. We are a new child. I've been to Bloomberg for 17 years, so I'm still learning. That's for sure. This is a sea of information, and the whole idea that we are trying to do is that to help you guys to look at the overall market and zoom in to give you the opportunities and then dissect single and multi-security analysis all in one platform. So yes, we've been working on it, and this is aggressive thing. So check it out. Our thing is a free sign up at the same time. And as I say, we are here, and give us your feedback, whatever you want us to build. And this is what we wanted to do. Benzinga is doing an amazing job. This is the product for the people, by the people. And that's what I want to mention over here.
All right. Well, thank you again for joining us today. And I threw the link in the chat, so everyone go check out Klick Analytics. And like I said, Adnan, we got to get you back on because this was fun.
Absolutely.
I'm curious. I know you'll be putting new tools and stuff in there as we go on. So we got to stay updated on that.
Absolutely, guys. Very happy to be with the Benzinga Nation. You guys are doing an awesome job, and looking forward for our next thing together.
All right. Well, again, thank you again, and enjoy the rest of your day.
Thank you so much.
All right. Bye-bye. All right, y'all. So next we got Money Mitch coming on to hang out with us for a few minutes, but Money Mitch has a special request for us. He's got a pick for us, but he wants us to get those likes up real quick. We got 400 people in here, so smash the like if you want to see whatever pick Money Mitch has got. He's got it backed up by Google Analytics. I'm curious. I want to see what it is. So let's see how we're doing likes wise. See if we've got enough to get Money Mitch up here.
What up? I'm not going to give the pick just yet. I got to see those likes get up, but I'll at least give a little background here, guys. Money Mitch, guys. Don't forget, guys, today at 6 p.m. Eastern, I'll be going live again. This is the second episode, guys. There's going to be some fun talk. We're going to be opening NFTs, talking about sports betting, a little bit of Kathy, some story stock, some Google Analytics. You don't want to miss this, guys. Interviews, everything in one show. So check it out, guys. Definitely. Did we get it? We got 199. Come on, man. Who wants to be 200?
Bam.
Who wants to be 200, guys? Come on, guys. All right, I'm seeing it. Look, I see 199. We need that 200. Who's it going to be? Who's it going to be, guys? And of course, guys, if you haven't checked out already, check out Benzinga Clips, guys. Benzinga Clips is where I'll be putting out some of these picks also from Google Trends data. And if you guys want to check out maybe some of these picks, I'll put these in the chat, this link for our Benzinga Clips. Definitely join our new channel if you want some short information, right quick to the point. If you're a TikTok fan, you're an Instagram fan, you like those short videos, this is exactly for you. All right, guys, it looks like we hit that 200, 224, man. That's what I like to see. Fucking yeah. Let's get it started. I'm sorry for the cursing. I don't curse too often, but let's fucking get this going. All right, so I need really quickly in the chat, guys, because we only got a couple minutes left. Put a 1 in the chat if you're thinking about going to a concert this summer. If you'd like to go to a concert, put a 1 in the chat. And so really quickly, I'm going to show you guys here. This is the 12-month data. And look how this has gone sleepy and taken off, guys, all the way to the top, really starting to rip through. So we're doing a Google Trends search here for concerts only here. So now let's go a little bit further back. Let's do a 5-year trend. In 5 years is what's it going to show you? That concerts are cyclical, right? They come in the summertime, guys. And I think this is very important, is to understand that they do come in the summertime. So if we look here, we're going to see spikes in the summer and they peak in July, usually July 4th, mid-summer time. That's why you see this kind of wavy action on this trend line. And so that's very important to note, guys. And so if we focus in here, we've seen kind of how it really dipped off, right? From 54s, right? And look how this is turning back and almost there back. It's 35. We need to get it to 50s on the 5-year trend. And so that's what I would really want to see it take off. But I think you might just see some stocks really start moving here. And so what are the plays, guys? So the first play up I'm going to talk about is Madison Square Garden. I love this chart, guys. This is bouncing off the 84 here. Look at this level, guys. This is MSGE. Producer AB, stop looking at your phone. Put that ticker up. I see you, motherfucker. I see you. You think I can't see you? I see you. Put that ticker up, MSGE. You guys hit them up in the chat. Let them know. We want to see the tickers, man. We want to see the tickers. So here you go, guys. MSG bouncing off the support. Let's see if we can get back up there towards that 100. That's what I'm going to really go ahead and see, of course, with MSG. You're not talking about the sports. You're talking about the entertainment side here. So that's what I'm going to focus on. The next one up, my best pick here is going to be LYV. Why? Because this company almost went bankrupt in the pandemic, guys. But I think now that we can get kind of this kind of new time when we get this vaccine time, I think you're even going to have to be required to wear a mask to go to these concerts. But that's how they're going to be able to bring a lot of people back into the stands. They'll just keep our mask on, and the people that got the vaccine, but you'll need your mask. But I think we're going to get a lot of people back in LYV. And if you guys don't know, this is Live Nation that specializes in promoting live events. They bought Ticketmaster in 2009 for $2.5 billion, exclusive deals to promote concerts. You got artists like Madonna, U2, Jay-Z. A lot of people are going to be coming back, and they're going to be wanting to make some money, these artists. So I think you're going to start seeing a lot of concerts being put out. And did you know that Live Nation its live music fans are apparently holding on to their tickets? It was said that the data shows 86% of customers held on to their tickets instead of just getting a refund. They just held on to their tickets because they know it's going to be rescheduled versus getting that refund. So that's a good stat to point out there. So I'm going to be looking at that, guys. Google Trend data pointing up and up on concerts. So definitely, AB, you can come back and join me. I wanted to knock that out really quickly. It's already 2:02, so we can get on out of here. But don't forget, guys, check out Money Mitch today. Going to be opening up some NFT Topps cards. I got some packs, man. A lot of people couldn't get them. They sold out in less than 70 minutes. AB, less than 70 minutes.
That's for the baseball ones.
Yeah, the baseball ones, man. Chris and I were working hard to get them, but we got them. A lot of people, even in the SPAC game, weren't even able to grab them. So if you want to see me opening one up, definitely check out tonight, guys. And of course, check out the Benzinga Clips channel so that you can see these in the short form. The same way we'll clip this one out, you'll see this one in there. So if you want to see that and you don't want to spend the whole hour with us, that's okay. I won't be mad. You can go see the short form content, and we got it for you. And that's what matters.
All right. Well, wait 1 sec before we go off. I have, I don't know. Are we doing, I have it set to redirect to first trade right now, but apparently that might not be right. I'm trying to get the word back from Spencer.
Well, we might want to get that right before we end broadcast here, but you go ahead and figure that out, AB. I'll do a little promo action here for us. All right, guys. So one of the things that if you guys don't know, we definitely need you guys to go ahead and subscribe, become a part of the community, because that's really what it's all about. We have a community here, guys. So definitely join us. I'm going to go ahead up and play this little trailer here to let you guys know how much we need your support and really what we're really all about here.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you know, you just had all your callers in right then. And it's all about the community here at Benzinga.
Like we said it best, guys. It's all about the community. All really about the community. So, AB, what's up? What's up? What we gonna do?
Oh, we got it figured out. You know,
bam.
You got primetime VCs coming up.
Prime time. Let's get this rolling. Let's get it rolling. All right. So we're going to go ahead up and wrap up, guys. Like always, hit that subscribe, hit the bell down below so you can be notified when we get these videos out. And like always, my man AB working hard. We'll keep building. I'll see you guys on Money Mitch. And until then, up next, Prime VC, fun graphics show, kind of like Around the Bell, but on VCs, different topics. Check it out, guys. I think they're even talking about Shaq Spacs. I don't even know what's going to be on, but I'm going to pay attention because I enjoy this show. I've actually seen this, so check it out, guys.
All right, and we'll be back not tomorrow for Zinger Nation, but on Friday. We got Clean Tech tomorrow.
Yep.
So
clean tech, guys. Definitely check it out, guys. And like always, if you need a discount to Benzinga Pro, check it out, guys. We got the discount right there. Ben's YouTube 20, or if you want to be an affiliate and you got yourself some traffic, bring it on. Earn 30%. You know, hey, there's some people making some hefty profits on there. So,
all right, well, we'll see you tonight, Money Mitch.
We'll see you guys.